The sponsor of Liftoff with Keith is the one and only CompassStrategicAdvisors.com, an experienced partner to help you navigate everything from cap tables to stock option and compensation plans and all types of backroom and marketing services. There is no better friend to the startup CEO than Compass. Check them out at CompassStrategicAdvisors.com. Well, this is exciting another episode of Liftoff, and with a slightly different guest than I've had in a little while. We have Rob Schoder, the founder and CEO of Vinyl. And Rob, I don't know, 200 IPOs or something at AngelList, where he saw how these outdated systems were creating a lot of unnecessary friction for founders and investors, shareholders. And like a great entrepreneur does, he goes, wait a second, I think we could do something better. So he came up with Vinyl to modernize ownership infrastructure for public and private companies. He did a light little Series A raise of 20 million recently, and he wants to change how things are going in the capital markets, what's happening with shareholder ownership. And listen, everything's changing, and why not this level of platform? Way overdue for innovation. It's an area that I am really interested in, although it can be a little geeky at times. Rob, welcome to Liftoff. Help us ungeek a little bit of this category, will you?
Yeah, thanks for having me, Keith. So yes, my name is Rob Schoder. I am the CEO and co-founder of Vinyl Equity. Vinyl is a modern transfer agent, and you're right. Very few people actually know what a transfer agent is. And so Vinyl caters to public companies or soon to be public companies. And I think if you're unfamiliar, you could think of a transfer agent as the source of truth for equity ownership. Transfer agents are uniquely licensed by the SEC to be the source of truth. Every public company in the United States is required to have a transfer agent or to retain a transfer agent.
Right.
And in a part of those licenses, or that the transfer agent licenses, that they are uniquely licensed to issue publicly marketable securities. So every time a company goes public, they hire a transfer agent to take their cap table in the private market, to cancel all those shares, and to issue shares that you can trade in your brokerage accounts.
And that's where things get to be very adventurous.
That's an understatement.
Because again, accurate cap table meets a public market. You gotta do a lot of knitting to make sure all the data matches.
Yeah, and you shouldn't have to, right? I think
Right.
the reality is we are probably 15 and change years into what I would categorize as the digital revolution for record keeping.
Yeah.
The vast majority of private companies had their cap tables kept on Excel spreadsheets for 20 years or 10 the 10 years of their life cycle, and it would be warehoused at a law firm. The lawyers would maintain it, and then it would show up time to go public, and you'd say, oh, that's where my shares have been. Now, the world that we live in, these investors make investments in private companies, and they can see their shares. They go on this journey with the company over its life cycle and throughout their investment, and they always have a point of reference. They log into Carta, they log into ShareWorks, they log into any of the cap table solutions, and they know what they have.
Right.
The transfer agent world doesn't operate like that. And so companies go public, and what you've had 10 years of context that you're tracking this company through this web portal. Company goes public and you lose visibility into that entirely. You're flying completely blind.
Yeah.
And every transfer agent in the market, instead of emailing you, even if they have an email, they will literally mail you a temporary access code to your account. And they won't do it until the day the company goes public. So you're flying blind until that mailer shows up at your doorstep a few days later. And so Vinyl was founded to solve that user experience problem, and then to solve all of the liquidity challenges that occur downstream as a result.
It almost feels like a 1960s to kind of a technology. But now we're moving to the forward. You did 200 IPOs or whatever while you were at AngelList, which was the amazing platform. And you saw things. What was the moment that hit you? Said, "This is it. I'm done. I got to go start this thing called Vital Equity."
So AngelList is a really unique business because the way that it's structured, they have 40,000 active investments under the AngelList General Partnership, which made it probably the largest venture capital portfolio in the entire world. And my role was to own all of our systems and processes from capital deployment to liquidity. So we had to experiment constantly with novel mechanisms to manage a portfolio. In the case of IPOs or liquidity events, we worked with paying agents and transfer agents all the time to get hold of our shares so that we could liquidate them and return capital to our shareholders. And I happened to be there in 2021 and 22. I spent the better part of 18 months trying to work with every one of these transfer agents because we had so many IPOs to figure out how to navigate them more efficiently. And so much of my experience was, you've got to be kidding me. We have 3 IPOs going on. What do you mean I can't have a conversation with you about all 3 at the same time? I have to call back into a call center, wait 20 minutes to get a hold of the right person, and then hang up and do it all over again. And so I spent 18 months trying to figure this out. I happened to go on paternity leave. And while I was on paternity leave, my wife and I had moved houses. And I was doing some administrative life cleanup, tried to log into one of the large transfer agents to move some shares that I actually coincidentally held there, and realized I had forgotten my password. And so I clicked forgot my password, and it says, we've mailed a temporary access code to the address we have on file. The entire premise of my logging into the platform was to change my address, right? So 21 days, end to end, 6 hours of phone calls later, I finally got them to update my password to the website to mail a temporary access code to my new address so that I could log into the platform.
I think I know who the transfer agent is. But anyway, we won't name names. I think I know.
And so,
unbelievable, yeah.
Literally in that moment, out of frustration, I built a deck. I sent it over to one of my friends who had raised money from some VCs. And of course, I, at this point, having worked in AngelList, knew quite a few. And I said, what do you think about this? And my friend said, I was trying to buy a diamond ring for my soon-to-be fiance, and I couldn't get my shares out of ComputerShare in order to liquidate them so that I could buy the diamond ring. We lost the diamond.
Yeah. Oh, God.
He said, you have to build this business.
Yeah. I was going to say, how hard has it been to convince the legacy companies that, that this is the right way? Or do you have to go all net new business? Are you converting existing? How does that look? Because I see the problem. I've experienced the problem, not quite as much as you have, but I've experienced it with, dozen or so times trying to get that information. But it would still feel like, founders are not that aware of it. Like, they don't think about transfer agents and legacy versus contemporary. Cap tables are a little bit more visible.
Right. Yeah, they are more visible. That transfer agents have done an extraordinary job of sort of insulating themselves from shareholder frustration and insulating their paying customers, the issuers, from experiencing that frustration secondhand. When we started, the feedback that we got was nobody ever got fired for hiring the legacy transfer agent, right? It's sort of, I think, what could colloquially be referred to as the IBM problem for any new company. Yeah. Increasingly, what we're seeing is that we are in the middle of a platform shift. And I don't think it's any surprise that AI is changing the way people view the world. And all of our competitors, every single one, was built prior to the year 2000, prior to Y2K. So their operating systems were built prior to Y2K. And you can imagine that those platforms are not particularly well adapted to the use cases of AI. And so increasingly the messaging has become, don't you want a product that is built for the future? And in our case, it started out like, hey, we have APIs. We can integrate with your other service providers who have natural operational dependencies on us. We can allow shareholders to permission access to their financial advisors. Wouldn't that be really interesting? Increasingly, it's, wouldn't you like to have an MCP server that you can query to do X, Y, or Z? And by the way, the entire capital markets infrastructure stack is talking about moving on chain. If your transfer agent doesn't update their records until 5 p.m. every day because they use a COBOL-based mainframe, it's going to be really hard for them to get to real-time on-chain reconciliation between the core operating system. And so much of the market has sort of moved in our direction. And I like to think that some of what we've built has enabled people to kind of see that it's possible to look at things from a different perspective. But, it certainly was early on. We felt like we were pulling the market in our direction. Now I think we're starting to see the dominoes fall. It happens that technology-oriented companies, they see the benefit immediately, right?
What is the main catalyst for a company to say, I got to go with Vinyl versus Computer Shares or somebody?
9 times out of 10, it's the user experience. Whether people have been through it or not, when they look at our product, I think we're probably one of the only transfer agents that demos our product. We are one of 4 proprietary operating systems in the market. Of the 4, we are the only one that has been built in this decade.
I love when you mentioned COBOL. Can we throw out some C++ or Fortran into the conversation too?
Exactly.
But does that in terms of decision-making process on the customer side, are you allowed to go to the founder, or are you more likely to go to the law firm or the other kinds of folks that are managing that process, the other providers?
So we generally sell to the CFO suite or the legal suite. More often than not, they'll defer or they'll reference their law firm or their securities law team. And so for us, we've spent a lot of time socializing the benefits of the platform and how we can reduce costs and time in getting ready to go public and thereby reduce bills with your lawyers. But we've also spent a ton of time talking about the efficiencies and cost savings that can be gained from using a more efficient, more integrated system.
Interesting. Companies are staying private longer. Employees own more equity, and cap tables are increasingly complex. So why does that make ownership infrastructure more important today than ever before?
Look, I am of the belief, and what we see is that over a company's life cycle, there are a lot of hands in the pot. There are a lot of people doing things differently, and there's not a ton of version control and more manual, manual operations and database-oriented technology solutions. I think that's one of the benefits that Carta created when it created the cap table market, was that you could actually see what you own and validate it. That hasn't existed in the public markets. And so for us to be able to provide a seamless bridge as these companies do come to market, because their cap tables are bigger, more complex, it makes it easier for companies to validate that the information is correct. And we hear stories all the time about companies that went public and found out their transfer agent didn't do the things they were supposed to do until a year or 2 years later. Because they don't have access to that information. They don't have the visibility. We can offer that out of the box.
I would imagine that's the ideal time. So what is the message then to founder, chief legal, chief finance to say, get started now? Let's not have this conversation in 2 years when you're,
you've been public and the ship has sailed.
You're at SpaceX with all this demand and all of these shareholders and I don't want to use a specific example unless you care to extend that, but just in general, why do they have to know about it now? Why do they have to reconcile that decision?
Well, I think what we find is that transfer agents will just generally take the data that they get and they won't ask questions. So when a company's onboarding from private and they're getting ready to go public, we actually will do a diagnostic of their cap table and we'll say, hey, here are all the data elements that are missing that would make it easier for a shareholder to transact. So a company goes public and 6 months down the road, what ends up happening in the traditional transfer agent experience is that the shareholders sit there and they say, oh, you have my name spelled incorrectly, or my address is wrong. That's why you didn't contact me. And we can solve for a lot of that friction way upstream And ultimately, if you think about the shareholder experience and what the outcome is when they have a hard time doing
Hmm.
something, they go back to the company. They go back to investor relations. They go back to their equity plan administrator. And so it becomes an administrative burden for the company or administrative drag for the company, all of which can be reconciled well in advance when a company goes public.
Yeah. You're in a regulated industry also. How does that change the ideal of a CEO, entrepreneur, innovator? Is it easier? Is it harder? How does that look to, or does it matter, I guess? Is it a competitive advantage?
So it definitely matters. I think it's easier to define requirements. It's
Okay,
harder to build fast. You have to make sure that everything works. You have to make sure, it's not a measure twice, cut once thing. It's probably measured three times and cut once, but it's definitely not a move fast and break things kind of world.
got you.
We can't push a product that we aren't sure is going to deliver the shares that you're looking for, in whatever brokerage account you have. Um, we have to be 100% certain. And
Yeah.
so, and the reason for that, for what it's worth, is that we're dealing with, in a lot of cases, the highest profile investors at these companies, right? The earliest investors, the CEO and founder,
Yeah.
their financial advisors, and we are working with them hand in hand to make sure they have a clean, solid user experience. Um, but I don't think that exists in the legacy transfer agent world. It's just a different construct.
It seems like you have the wind in your sails with all these other companies that have come before you, Stripe. I mean, that
Sure.
was 10 years ago. That was just an idea, right? At YC. And all of a sudden, boom, it's the overwhelming industry standard for digital payments. It's a crazy story. And you're at the other end of the spectrum, right? But it's still at the same time, it's innovative, new digital-based technology that's starting to talk about tokenization, blockchain, AI. And so that's where I feel like the wind is in your sail. Are you experiencing that? Is there a real pull in demand, or is it still a fight for every bit, and it's a lot of Luddites out there in this category.
So when we started the business, one of the things that I used to tell prospective investors is we spent the last 10 years essentially putting lipstick on a pig, clean, nice user experiences with just crummy, decades old infrastructure. And we've reached the terminal state of the benefits that we can provide without solving for the infrastructure problem. Transfer agency is definitively the infrastructure problem of infrastructure problems because nobody thinks about it.
Hmm.
And I should say, as a shareholder, you certainly don't think about it, right?
Until you have to, and you
Until
screw. Yeah, I get
until
it.
you're changing your address, and it
Right.
takes 21 days. Um, but you're right. The benefit that we have been building this business now is that not only are we pulling issuers forward into this belief that things can be done better, but the market is saying, "Hey, we're ready." And so whether it's NASDAQ or New York Stock Exchange or the DTC exploring tokenization because tokenization offers myriad benefits, across the entire capital markets ecosystem, we can say, hey, we're the only one that's ready to embrace that. And so what we found is that where we originally thought we were going to spend a lot of time selling to microcap companies and that may have been categorically ignored by the legacy transfer agents, the large cap companies, the mid cap companies are pulling us up market saying, you've actually purpose built this platform for our needs. You've built this platform to solve all the problems that, frankly, we uncovered when we were interviewing the mid cap and large cap tech employees that we know, right,
Right.
from our venture network. And they're saying, thank you for building this. I've got to tell my friends about it. And so we're seeing a lot of demand up market, which has been really nice, refreshing.
Can we take a pivot and just understand where the business is right now in terms of the product and the customers?
Yeah. So we work with, so today we are one of 7 transfer agents globally eligible to work with New York Stock Exchange listed companies. And that is what I would categorize as probably the highest order of approval, certification, et cetera, in the transfer agent world. Of those 7 companies, again, as I mentioned, we're one of 4 proprietary operating systems, the only one built in this decade. And we work with companies across the OTC, New York Stock Exchange, and NASDAQ, ranging from micro-cap companies to $10, $15 billion companies. We've processed thousands of transactions, and we've processed thousands of transactions at scale in tighter windows of time than any transfer agent is capable of. And we know that because we've won business that others have turned down because they're not capable of it. And so every day we find corners of the world that we're building something so novel that nobody's been able to accomplish it. And it's an exciting place to be.
Yeah, I was just going to ask, what are you most excited about in terms of looking down the future, and you're running a company, so you're obviously dashboard driven. What are the things that you're excited about where you're going?
I'll be really candid with you. Today, we look around and we do think we are a unique solution in our market.
Yep.
We are the only one that is API native and cloud-based and capable of integrating with other people in the market. And so as we look to our partnership ecosystem, we think that we perform a number of functions. We reduce risk, we reduce cost, we increase efficiency for everybody, from the brokers to the lawyers to the shareholders and the issuers. And if we can solve these ecosystem constraints that have frankly been around for like 40 years, like, we're not talking about a new problem. These are legacy problems that have held back innovation in our capital markets. We think there's a huge opportunity to expand not just the transfer agent market, but to expand and enhance the way that our capital markets function. And Vinyl is uniquely positioned today to act as the bridge between the old and the new, continue serving everybody, in the legacy capital markets more effectively than they ever have, and then actually create something new, create the new paradigm on which, we will be operating in the next 10, 20 years. Without a lot of people sitting there saying we can do it too.
Yeah. I zoom out, Rob, and I just see a huge opportunity, like great idea, huge white space. Anyone that's experienced this problem, as we both have, so I know there are many more that have. But as I zoom in, I'm trying to understand what the velocity is at the company today, and what are the biggest, I don't know if I should say challenge or opportunity. I'll let you decide. Is it a low hurdle or high hurdle? And is it more awareness, or dealing with status quo, or people unwilling to change, or you just getting out there from a selling standpoint, or a testimonial standpoint, referenceability standpoint,
Yeah. So there are a number of functional milestones in order to be a transfer agent that people are willing to work with. One of which is, the number of IPOs that you've done. The other is, have you gotten people through a lockup seamlessly? Have I solved Keith's problem when he's trying to liquidate his shares at the time of the IPO? And Vinyl, gosh, we hit all those milestones toward the end of last year, early this year. So we're relatively new. And because of that, we haven't really been able to go headlong into the commercial life cycle. We just started really selling. My investors will, they'll roll over in their chairs when I say it. We haven't spent any money in marketing. We go to conferences.
Sure.
But, and I say that not as a mark of pride. It's just, we just haven't been all that aggressive in socializing the message. That will change. And so much of what we're doing today is formalizing the message and getting people more and more comfortable with the idea that we have executed. We've done the things that we said we were going to do. And we're ready now to step on the gas and scale. And that's a huge part of the reason that we raised our Series A. We found some incredible partners in Jump Capital, you may know, and MUFG is the 10th largest bank in the world, along with all of our existing investors. And every one of them looked at what we're doing and they said, we know the capital markets. We know this problem intimately. And we think you guys are the guys who are ready to go and ready to run against it.
Exciting times. So let me go to a little bit of quick fire here, Rob, and we can go fairly quick fire. We can kind of
Sure.
amplify a little bit.
Yeah.
But I love the fact you were at AngelList for a while. You saw so many hot companies. Now you step into the entrepreneur visionary seat. And, what's that leadership lesson that you take with you from that experience watching all these companies go through IPO, do all these innovative things that's helped you grow this company and get it to where it's at today?
I think you have to be, look, I think there are founders who are extraordinarily headstrong and they will have an idea, fixate on it, and they will just take it to the end of the road. Um, I'm a Midwestern guy. I like to think that, somewhere along the way, I'm a little more in touch with my mortality. And I think you have to be extraordinarily willing to listen to what the market is telling you. And the reason that vinyl is in the position that it's in is because we spent an inordinate amount of time talking to customers and talking to prospects and asking them the questions, what do you want to see? And it turns out that it's something holistically different than what any other transfer agent offers or what any other transfer agent is built for.
Right.
And so because we were able to think about it from that perspective, we were able to build a core operating model and a core view of the world that we could then iterate on the margins. And so for us in enterprise software, especially, so much of this is about knowing your users and knowing what they want to see and knowing the things that bother them. And in an industry that hasn't seen innovation in 40 years, we found that it was like, greenfield space. We could go do so much.
Yeah.
Um,
You have like a
but
market requirement document of 100 pages and
yeah, exactly. I mean, my dreams for this business,
yeah.
I could tell you I could talk to you for weeks. But we had to pick the one thing that was really compelling to us, and it was the key point of interaction between the issuer and the transfer agent. And so we've automated that interaction. We've created a seamless interaction where there are otherwise humans, and it has allowed us the opportunity to go and expand. And so listen to the market, make sure that you're actually hearing your customers, because on
Yeah.
one hand, it is good to be headstrong as a founder, but on the
Right.
other, you got to know when to listen.
Right. Because you could have just gone out and fixed that change of address problem.
Yeah, exactly. That's right. That was the start of the dream.
So what's the best advice you recall receiving as you were thinking about this, developing this, going through the meetings at the coffee shop and the living room, table and stuff? What is it that in the back of your mind was in your ear?
You got to find great people and people who have built for scale. Um, I think in our case, it's sort of unique because the breadth of our product is so substantial. Transfer agents do so much. They keep records. They manage proxy voting. They manage corporate actions, M&A, dividends. There's a payments element to what we do. You have physical operations with people who literally have stock certificates under their mattresses, and then you've got people who are talking about building and issuing equity on chain. The breadth is significant. And so to be able to coordinate and collaborate with a bunch of people who can see the world from 10,000 feet, but also get extraordinarily deep and
Uh,
extraordinarily narrow, is huge.
on that point, it's kind of an arcane industry. How much do I have to have specific domain knowledge, expertise versus hiring people that are just smart, adaptable?
I think you have to have the marriage of the two. I don't think you can't build this business with 100% of, fresh grads or McKinsey, startup fanatics.
Mhm. Okay.
You've got to have people who have lived in it. And I do think this is one of those industries that, for 40 years, people said the transfer agent industry is dying. Now it happens to be the critical infrastructure point or throughput mechanism between the
Yeah.
tokenized world and the traditional world. But you need some measure of balance, especially as you start the company. Now, I will say, over time with AI, you can remediate almost all of that. Right? If you think about building a core operating system that's able to reference every customer interaction, every corporate action that you've ever done, every every law or regulation, and then distribute it to your entire employee base, you can remediate the entire mass of domain knowledge down to usable tidbits for your employees.
Yeah. Rob, we're clearly seeing the democratization of these private markets. What's a myth about capital markets you'd like to see eliminated?
I don't know. Efficient. The markets are entirely efficient. I think there's increase. We're actually going to see markets become, I think, less efficient as you have equity on chain and off chain. I think there will be a meaningful period of time in which the markets are not actually optimally efficient.
Yeah.
And that'll be owed largely to systems. It won't be owed to, supply and demand, because theoretically it should be fluid in both ecosystems if the assets are the same.
Yeah.
It'll be owed to the ability to balance on either side of the equation.
Interesting. So I always like to ask this question too, Rob. If you're going to start vinyl again today, what's one thing you would do differently? And listen, this is founder to founder. It's sort of asking, we know there's always some things you would do different, and it could be minor. It doesn't have to be majors of a thought that occurs.
We'd probably market earlier, candidly. Like,
Yeah.
I think there's a trap as a founder to sell the dream and then to be forced to sort of reconcile your reality. And I think if you lean too heavily into reality, you end up missing moments to actually market your accomplishments and sell your accomplishments in service of the dream. There are things that I see other companies do that we view as table stakes, just part of doing the job. And they're putting out press releases for things that we view as relatively inconsequential. That for me is a moment where I sit there and I go, I don't know if I would know a marketable moment if it hit me in the face. And yet I think there was a huge opportunity for us to do that much earlier in our life cycle. And so I would recommend strongly to anybody, within reason, to market your capabilities as soon as you have them, and to not, to celebrate the small moments and celebrate them publicly.
Well, get that story out there. I like that attitude for sure. And I know you'll make that happen. Listen, we are at time, but we're also at an interesting time in the market. I just feel like, you're at the table, man, where a lot's happening and we're going to see some radical change. And founders, on one hand, spend so much time thinking about raising money. Like 99% of their financial brain goes to fundraising, where, hey, how do I take care of my shareholders? And what's this infrastructure that's going to manage all this asset ownership and liquidity and this transfer stuff? How are we going to manage that? And I think it starts to shift. I don't think it's ever going to flip, but I think there's going to be a huge shift, and people are really going to start to pay more attention to that. What do you think?
Well, in the public markets, you mean as a founder?
Yeah. Private companies.
Yeah, as a private company, you're always thinking about how you survive. Whether especially as a startup founder.
Yep.
Right? You're tracking your burn rate. You're thinking about when do you get to zero? You're trying to find ways to mitigate that risk, not just in growing your business, but finding people who are aligned with you. I think what we're going to find, especially for businesses like ours, is that you are going to have to find more thesis-aligned investors. And I envision a world where you've got, today, certainly we're starting to see it play out. I think something like 60% of all venture dollars allocated to startups were allocated to like 4 companies in the last year.
Wow.
That remaining 40% has to be particularly discerning about where they put their dollars. And I think as founders, you have to make sure that the people you're taking money from actually understand it. For a business like ours, we have an incredibly esoteric business. And so finding investors who really understood it or were willing to take the time to get to understand it's hard to do. And we're very fortunate to have found some incredible investors, and whether it's Infinity Ventures or Spark Capital or or index ventures before Jump and MUFG, we have found unbelievably thesis-aligned investors, for Vital.
Good job. I'm so happy for you. Congrats on your Series A. And
Thank
I
you.
guess we're going to be excited to watch this growth, this drumbeat as you get out into the market even more. And it's going to be fun to watch. Thanks for joining the Liftoff.
Thanks for having me, Keith. I appreciate it.
Okay, Rob, take care.